Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Will Rhind, CEO of GraniteShares. So, Will, you have an eclectic mix of ETF in your lineup at GraniteShares. I want to touch on a few different areas today, but I want to start off with gold. Prices hit an all-time high not only a couple of weeks ago, I think, actually, and things are looking really, really good for the precious metal. What do you think is going on? Does this rally have legs?
It certainly does. And you remember that this rally has been going on now for quite some time, that we've held gold prices at $2,000 an ounce or more. So it's certainly something that we've been sustaining for quite some time. And as we move through $2,100 and $2,200, $2,300, it seems like the market has showed really a lot of resilience, especially in the light of the last few weeks where maybe there's some concern that interest rates were starting to tick back up again, which of course would be negative, all things being equal for gold. So I think the market's been very strong at the moment, and a lot of people asking, well, why is gold at all-time highs or at or near all-time highs? And one thing that perhaps is less appreciated here in the States is that right now there's a huge amount of demand for gold coming out of China. Asia more broadly, but China, and that's from Chinese, let's call them individual investors or retail investors that are buying gold because their number one sort of investment, if you will, property, as most people know, is in such bad shape in China due to the economy and the performance, particularly of the property sector, that because people have lost so much money in the property market, they're now resorting back to what they kind of know, what they love, which is gold. And that's really helping on the demand side.
And of course, Will, you manage one of the bigger gold funds, ticker symbol BAR. I'm curious, how would an investor who's interested in participating in the gold rally, or even they want to hold it for the long term, how would they go about buying it after such a big rally? Does it make sense to wait for a pullback? Do dollar cost average? What do you do?
Yeah, it's interesting. I think I have to look up this stat for the gold market because I heard it the other day relating to equity markets. And I thought it was kind of an amazing comment, which is that, equity markets, and this was in particular, we related to the S&P 500, that equity markets stay within 10% of their all-time highs, 83% of the time. So what that means in sort of simplistic terms is that the market is always kind of at or around its highs, or at least within 10% of its highs. And therefore, if you wait for a pullback, you could be waiting for a long time. And maybe in certain cases, that pullback never happens, which of course would be even worse. So I think, regardless of whether you think that, it's a good entry point with gold now, or whether it's a dollar cost average thing, the one thing I have learned about gold, and, again, if history is any guide to this, that whenever people have bought gold in the past, it may take a few years if there's a dip, but gold has always come back and regained a new all-time high, especially, in the last sort of 10 to 15 years or so. So I think like all these things, unless people have a particular conviction around an entry point, then dollar cost average is probably a sensible way to go.
That makes a lot of sense. Now, Will, I have to ask you about your Nvidia ETF, NVDL. This is crazy. It's now a $2 billion fund in just 18 months. You must be ecstatic about the success of this ETF.
Yeah, no, absolutely. I mean, I remember when we sat down in Florida kind of earlier this year, and we were talking about, at that time, NVDL going to $1 billion. And obviously it's motored on since there, up until 2 billion. And, clearly people are hugely excited about Nvidia earnings coming out next week. And that's going to be, really a huge kind of talking point, I think, for the entire market and the AI industry more broadly. But it's been a great success story. People love Nvidia. They like 2 times Nvidia, through NVDL even more. And the stock has performed. And, in this particular time, Nvidia has been the stock that is winning in terms of AI and making the most money from AI directly. And I say that AI and, second, but still a popular theme has been crypto. And those are really the two themes that have still continued to endure this year.
Obviously, Will, the fate of NVDL is going to be determined by where Nvidia stock goes. You mentioned the earnings are coming out soon. What do you think is going to happen there? Is it going to drive the stock significantly one way or the other? And what about the long-term, direction of Nvidia? Does this stock still have a lot of upside?
I think so. And look, I think irrespective of what happens in earnings next week, I know that the street consensus is overwhelmingly bullish on the stock, and the vast majority of analysts, have the stock higher and upgrading even price targets for Nvidia. So, whether they come out next week with a number that satisfies the street or not, is kind of remains to be seen. My personal view is I think it will be a bullish quarter. I think people have underestimated the company now, for at least the last sort of year and a half. And, I could go back 12 months when people were talking in a similar way about Nvidia earnings and saying, it's not going to outperform. They're not going to beat on earnings. And of course, they continue to deliver these amazing gains from AI. So I think that I'm bullish, or I'm positive for earnings next week. But more broadly, it's worth asking yourself the question that, leaving aside this sort of quarter to quarter, drumbeat of revenue and earnings, is, do you think fundamentally that Nvidia is going to be a bigger company 5 years from now than it is today, or 10 years from now? And I think if the answer to that is yes, then, it's a stock to remain positive on. I personally, haven't really heard any chatter suggesting that Nvidia is going to be a smaller company in years to come than it is today. So from that perspective, I think you've always got to take a step back and look. But certainly, AI was 100% real to me. This is a company that is winning in AI and will continue to do so.
Before I let you go, Will, are there any other single stock ETF of yours, or any of your ETFs in general that you want to highlight?
I think at this particular time, Sumit, we've got a combination of S&P 500. We've got the Nasdaq now at new all-time highs. We've got the reemergence of Roaring Kitty and the meme stock craze with GameStop and AMC. And people are asking me, well, what effect does that have on the leveraged single stock ETFs? And so far, I think what it does is just show that there's a huge amount of enthusiasm for the market right now, and particularly for trading and for maybe higher volatility stocks or securities. So while it doesn't have any direct relationship with what we're doing, we're clearly seeing big demand for our 2x Coinbase ETF, which is our CONL. It's done incredibly well. And then now, on the back of, I think, a bit of a resurgence, at least temporarily, for Alibaba, and Chinese stocks have obviously had a big rally in the last few weeks. And so our 2x Alibaba, BABX, and some of the more traditional FANG names, the Amazons, the Microsofts, etc., all sort of catching a bid. And then the one to throw out probably outside of NVDL is AMD. So we have AMDL, which is the rival, if you will, to NVIDIA. And that's, again, something that's been very popular. So we'll yet to see whether AMD sort of catches that, market zeitgeist, just like NVIDIA has.
Fantastic. Well, this was a great discussion, Will. Thanks so much for your time.
Thanks, Amit. Great to talk to you as always.